For more on finance, we're joined now from Sydney by James Gerrard from financialadvisor.com.au. James, very good morning to you.
Good morning, Michael.
All eyes turn to the outcome of the RBA's board meeting later today. It's expected to keep rates on hold, as we know. When are we likely to see a rate cut? I'm asking this on behalf of so many of our viewers.
That's right, Michael. So the consensus is clear. Interest rates are on the way down, but the big question is, when will they start to fall? And the answer depends on who you ask. So Reuters recently polled 45 economists, and 40 of them indicated that we probably won't see a rate cut this calendar year. We're going to have to wait until first quarter next year to see a rate cut. But then if you look at the share market through the ASX futures, they're sitting on the fence. They have a 50% chance of a rate cut this year, but they are forecasting 4 rate cuts next year. And then if we turn to the big 4 banks, CBA, they're the most optimistic about rate cuts. They're predicting 1 rate cut in December as an early Christmas present to mortgage holders, and then they're predicting a further 4 interest rate cuts next year. So what we have at the moment is a situation where inflation is falling, but the Reserve Bank want to be cautious and they want to see inflation fall further before they start to cut interest rates. So that means that we may have to sit on interest rates a little bit longer before we start to see them fall. And the other thing we have to remember is that the stage 3 tax cuts only came through a few months ago, and the Reserve Bank are a little bit concerned that people are going to spend their tax cuts rather than bank it. But the retail sales figures in July were pretty interesting. They were flat, which indicated that people are sort of tightening their belt buckles, they're saving rather than spending. So that's a good sign for people that want to see interest rates fall sooner rather than later.
OK, now there's some good news for older Australians, James, with a boost to the age pension. Can you run us through the changes that occurred last week?
Absolutely, Michael. So the single age pension rate just increased to just under $35,000 per year. And for couples, it's now just under $45,000 per year. So what that means, that's a $60 per month increase in the age pension for singles and $92 per month increase for couples. And how the age pension works is that you need to be over 67 years of age, you need to have been an Australian resident for 10 years or more, and you need to have assets and income below certain thresholds. So if people are interested in learning more about the age pension, there's a really good publication that's put out by Services Australia. It's called The Guide to Australian Government Payments, and it covers all the details of the age pension, but it also covers all of the other payments administered by Centrelink. So again, it's called the Guide to Australian Government Payments, and you can find that through the Services Australia website.
OK, and staying on the subject of retirement, what's this idea talked about increasingly for people leaving the workforce of a retirement sweet spot?
Yeah, so some people think that you need to have millions of dollars in super to have a good retirement, but that simply isn't true. There's so many Australians who are having a really good retirement with much less than that. And the way they do that, they're in this thing called the retirement sweet spot. And that's where they have some savings, usually in super, but they're also subsidised by the government through the age pension. And how that works in practice is that someone who's a couple who owns their own house, they can have up to $470,000 in assets and still get the full age pension. So say this couple has $450,000 in super, that means that they should be able to generate about $30,000 per year from super, but they're also picking up $45,000 per year from the Centrelink age pension. So that's $75,000 per year, which indicates a pretty good retirement. And just one last thing on age pensions, a little quirk of the system is that the family house is exempt as an asset. So that means in theory, somebody could have a $10 million house, but still be on the full age pension. It's a little bit quirky.
Yes, certainly is. James, as always, thank you.
My pleasure. Thanks, Michael.
James Gerrard there, and as always, please get your own financial advice.